Most condo buyers in Toronto are making the same expensive mistake. They think once the mortgage is approved and the down payment is done, that's it. It's not. I've seen buyers get the keys and only then realize they're suddenly facing another $10,000, $20,000, even $50,000 they never planned for. And the worst part, a lot of these costs don't show up in MLS and they're not obvious in the documents either. Stay with me because in a few minutes I'll show you one simple check that can help you avoid a risky building entirely. I'm Marco Momeni, a broker with Remax Hallmark, one of Canada's leading real estate offices. I've been in the Toronto market for over 24 years, with close to $1 billion in sales. Buying a condo isn't a risk. Buying without the full picture is. Let's start with one of the biggest risks, Kitec Plumbing. If the building was built between 1995 and 2007, this is something you need to take seriously. And this isn't just about leaks. In some cases, you may not even be able to get proper insurance. I've seen buyers close on a unit and within weeks find out they need a full replacement. $15,000, $30,000, sometimes more, before you even settle in your opening walls. Now, here's where a lot of buyers get caught. Low maintenance fees, especially in some newer buildings. It looks like a good deal, but not always. What you're seeing doesn't reflect the real financial condition of the building. In many new projects, fees are kept artificially low at the beginning. But once the board takes over, that's when the true costs become clear. 30 to 40% increases, sometimes within the first couple of years. Which means you bought based on one assumption, and now you're dealing with a completely different reality. And if you think that's the worst of it, give it a second. This is where things get serious. Special assessments. The building needs major repairs, but there isn't enough money set aside. So the owners have to cover it. Your share could be $12,000, $18,000, and I've seen cases well over $100,000. And it doesn't matter if you own the unit for 10 years or for 10 days. Now let's go back to that one check I mentioned earlier. In the latest reserve fund study, are there any shortfalls or major repairs coming up? Because if you don't know that, you could be stepping into a building where the financial problems are already there. You just haven't seen them yet. A lot of this information is buried inside the documents, and that is exactly where the most buyers miss it. Here's some things almost nobody talks about. When you buy a condo, you're not just buying a unit. You're inheriting the agreements the developer already signed. I was on a condo board where we uncovered a long-term elevator contract. Expensive, restrictive, and very difficult to get out of it. And guess who pays for that? The owners. So every time you press that elevator button, you're paying for a decision you didn't make. Let me give you a real scenario. Closing day, everything is ready. Then your lawyer calls and says you need another $4,000 for adjustments. Costs that didn't feel real before. But now you have to deal with them immediately. And this is where a lot of buyers start to feel the pressure. In today's GTA's market, buying a condo isn't simple anymore. The difference between a smart purchase and a very expensive mistake comes down to one thing: what you actually know before you buy. If you're thinking about buying a condo, before you make the final decision, make sure you understand these risks. And if you're not sure whether a building is financially healthy or not, this is where a real understanding of the market matters. I'm Marco Momeni. At the end of the day, the decision is yours. But what you know before you buy makes all the difference. See you in the next video.